Everybody's hair look okay? Okay, it looks like we're live on LinkedIn. Thank you everyone for joining us this afternoon. We are very excited to start off our second day of our Credit Captains Conference at Hayako Academy. And today we are delving into another topic that's been often requested by our audience, is what is happening in the world of international credit and collection laws, regulations, and Incoterms. So we were just talking before we actually get started here at the top of the hour. We have got our fabulous panel here of folks that are experts in the field that have been working in the international world for many, many years. And we've got Romelio Hernandez, we've got Luis Noriega, we have Cynthia Wimi, Octavio Jose Aranis, and we are thrilled to have this group with us today. And while we're waiting for folks to join us, we've still got a few minutes here before the session officially starts. So we were just kind of talking about how did we manage to assemble this amazing group of people to come and talk with us today. And we were kind of talking about how life can be so difficult in credit collections when you need help. But what makes that easier is having connections that you can reach out to that are experts in the field, that are willing to offer their expertise. And we have to, of course, give a shout out to Wanda Borges. Caroline Anderson and I were tasked with assembling a group of experts for this session today. And frankly, I think we kind of struggled, and we reached out to Wanda Borges, and she was more than happy to share the names of these folks for us to reach out and join this session. So welcome everybody. We're excited to have you today, and this is your debut on the Hayako Credit Today platform, and we hope that this will be the first of many sessions that we do on the international topic. How's everybody doing today?
Great.
Good. Glad to hear it.
Okay.
Okay, so we've got, let's see, looks like we've got a minute or two before people officially come in. And on our Zoom call, are we letting people in yet? Or are we just still live on LinkedIn waiting for some other folks? We don't know yet. It's a mystery. Okay.
I think there's a lot of people joining already.
Oh, good. Looks like oh, you're right. We got a good group, looks like. And we've got.
Yeah, it looks like quite a few are coming in now. I'll maybe give it another minute.
Fantastic.
It's not actually, it's 1:59. It's not quite 2 yet.
All right, we are a little early, and we've got, okay, great. Ashan, Carolina, Cindy Baker, Cindy Jacobs. Glad to have you guys all join us today. Donita Kohler, Eliana Perez, Jason Ridge. Shoot us a note. In fact, the folks that have joined so far, shoot a note in the chat box if you would, and just let us know what company you're with and what part of the country or what part of the world you're dialing in on. We always love to kind of get a feel for who our audience is, and that helps us kind of tailor our conversation to our audience that's on live with us today. And oh, Jackson Kayak out of Sparta, Tennessee. Fantastic. Maybe you know Caroline Anderson. She's a Tennessee gal too. Oh, Carolina, calling in from Montreal. Fantastic. We're really happy to have you. Capital One, ABL manager, Plano, Texas. Crowley, Jackson, Florida. CFAX. Kim Howard with CFAX. Fantastic. San Diego and Maine. Welcome to have you. I'm glad you could make it, Kim. HID Global. Fantastic. West Palm Beach. John Page out of Kansas City. This is great. Hey, Kathy with 3M. Remotely in California. Lucky you. That's fantastic. Oh, Kim, you're brand new to CFAX. We love CFAX. In fact, we need to have a conversation with you guys about all the things that we're doing on CFAX. We'd love to pull you into our mix as well. So, oh, and say hi to Doug Faust. He's usually on these calls, but I don't see him log in yet. That would be great. Yeah, we're doing a lot of really cool things, and we've got a lot of exciting programs. And oh, we got Pelican Products, Veronica from Torrance. Fantastic. While looks like we got a few more folks coming in. So as people join, we've got a pretty good group here going. For those of you who are new to Hayako, if this is your first event on Hayako, we will give you just kind of a little overview of what this is. This is basically we're categorizing this as kind of the YouTube of credit and collections. And the idea behind this is that as you're doing your job day to day, and if you have a question about, oh, I've got a credit application and it's regarding someone in Mexico. Okay, how can I go learn about credit in Mexico? The idea is that you could come to the Hayako platform and literally search online and search through our 150 tutorials that we have. All these tutorials are broken up into 2 to 5 minute video segments. And the idea is that as you're doing your work during the day, as you encounter challenges or questions, that you could literally log in to this program, to this site, hayako.com, and go find a little video segment that you can take 2 to 5 minutes to watch and hopefully get an answer to your question. We've also got a community program. So if there's not something that's already answered, you can post something in our community, and we've got a whole group of experts. Our audience just keeps expanding more and more. And it's something that we think has been kind of missing in the world of credit and collections. So we're excited to have the platform to do this. And yes, we are owned by HighRadius. HighRadius actually created this concept because they had to actually train their own people. And of course, with COVID and everything, it's really difficult to get people to come across the pond and go to an NACM conference or a CRF conference. And they felt that there was a need for this for their own people. And we basically made this program available to the general audience of credit collection as well. So we're pretty excited about what we're doing. And again, if you haven't logged in to check out what's on Hayako, do it today, do it this weekend. Great stuff. We're adding continually. We're adding tutorials, downloads, checklists, articles, blogs, podcasts. We're kind of turning into an omni-channel credit and collections platform. So it's great stuff. And we are really excited about even the direction that we're going. And this is actually our first international session. So it's pretty cool. Okay, looks like we're about 3 minutes after the hour. And it looks like we've probably got a good group here of people on so far. So we're going to go ahead and get started. Everybody all ready to get started?
Yes.
Okay, thumbs up. Fantastic. Okay, so today, again, this is our second day of our Credit Captains Conference 2022. And the conference itself is basically a 3-day event. So we started off yesterday with 2 sessions that were absolutely fantastic. If you missed those sessions yesterday, all these sessions are recorded and they will be posted on the Hayako website, and you will get an email probably middle to end of next week that lists the recordings for all of the sessions that we've done this week. So we did 2 sessions yesterday. We've got 2 sessions today. This is our first one on international credit laws. And later this afternoon at 3 Central, we have another great session coming up with Kelly Schmidt, who's a credit manager from Zillow, Andrea Wolf, who's got a phenomenal background in credit collections, and Bob Schultz will be joining us on that as well. And I think Dave Schmidt is going to be moderating that. And then also tomorrow, put on your calendar, we've got 2 sessions. The first one starts at 12 Central. And this is going to have Bob Schultz, Jeff Perlstein from Berlin Packaging. And we're also going to have Pam Crank from the credit department, who was on one of our sessions yesterday. And she is a wealth of information, and you'll really enjoy hearing from all 3 of those folks. At 2 Central tomorrow, we have another session, which is kind of our informal women in credit kind of continuation. We had a really good time a couple months ago where we invited some ladies in credit, and we talked specifically about their challenges and how they overcome them. And it was really well received. So we have Mary Lefevre, Robin Walters, and Magdalena Romo. And that's going to be a good session as well. Caroline and I will be moderating that tomorrow. So that's what the program is. In addition to these live sessions that we're having yesterday, today, and tomorrow, we have a bunch of online sessions that we've basically compiled from existing tutorials that we've done. And we've added to this, we've added a whole series of information that essentially will roll up into a certificate program. I talked a little bit about what Hayako is. Again, if you haven't experienced it, please, we welcome you to go to hayako.com, register. It's free to register. There are over 150 courses right now, broken up into about 2,500 different video segments. And you can navigate around, you can search whatever you want. You can search by the role that you have. Are you a collector? Are you a credit analyst? Are you in treasury? And we're excited because we've gotten some phenomenal response and feedback. We now have about, I think we're up to 18,000 credit and collection professionals that are a part of our community that are logging on, using these tutorials, not only for their own purposes, but also training their teams. and sharing this stuff with their peers and their industry groups and so forth. So it's really great stuff. And we're adding more and more. We actually purchased Credit Today about 2 years ago, and we're in the process of including the Credit Today content into the Hayako platform. So we'll be migrating all of that great content. It's about 24 years of stuff that has been built, created, drafted by kind of the cream of the crop. A lot of folks that you'll recognize that you see at all these events over the last couple of years, experts in their field. Those are the folks that have contributed to this. So it's great stuff that we're continually adding. So let's talk about what we're doing with this mini certification. This is the next step in kind of our goal to really offer rock solid tools to the credit and collection professional. So what we want to do is every session that you attend on Hayako, get through the end of the session. Several of these actually have a quiz at the end, but every single one of these, we offer a certificate of completion. So you spend an hour on a session, you go through, you take the quiz, and at the end, we're going to send you an email with a digital certificate of completion that you can actually add to your LinkedIn profile. And it looks really cool. And it's a way to basically show to the industry, to your peers, to your boss, that you know what's going on. You're actively taking a role in improving your wealth of knowledge, and you're progressing in your career. So really excited about that. So that certificate of completion was step number one. And the next step that we're going to is really this mini certification program. So what that means, it's essentially a compilation of a series of courses, downloads, checklists, assessments. And once you've gone through that series, then we're actually going to issue another badge, or essentially a certificate of achievement, which you'll see on the screen right here, where not only is it a nice, pretty certificate that shows up on LinkedIn, but there's a nice little badge that said, you are certified in credit collections laws. It's a mini certification program. So it's a great way to tell your boss, share with your peers that you are continually involved in learning and growing. So that's what that looks like. And of course, Bob Schultz, who many of you know and love, Bob Schultz has been around and he's had an illustrious career, and he's got a story for just about every situation you can imagine. Bob has actually helped us craft all these mini certification programs. So the one we did yesterday for UCC filings, those 2 sessions that we did yesterday, he actually helped us craft all of these programs, pull them in. There's 6 modules. It's about 5 hours worth of content. And of course, you get that digital badge at the end. And then tomorrow, we've got a whole other topic that's an additional certification program too. So what's in these programs? All kinds of stuff, right? So we've got 7 different types of curriculum. We've got checklists, downloads, etc. We've got blogs. We're even doing podcasts now too. So if anyone's interested in being interviewed on a podcast, let us know. We'll absolutely fit you into the program. Again, so this is what the digital badge looks like. And without further ado, let's talk about today's session. We, again, are very excited to have this group of folks on the call with us today. These are folks that you probably have seen at different events over the last many years. And we've got Romelio Hernandez, who is president at HMH Legal. It's a law firm that focuses on creditor protection and in Mexico and Latin America. And he's based in Tijuana, Mexico. But he also goes to San Diego quite a bit. So we're pretty much jealous of Romelio. But he's a phenomenal resource. And he's also very open to being, connect to him on LinkedIn. And I think you'll find he's a great source for you. But he's been around and done litigation regarding international for more than 20 years. And I think you'll find him to be a fantastic resource. We also have Luis Noriega. And Luis Noriega, he has actually had a long time career at the Exim Bank. Over 25 years experience in risk management, relationship management. And he also works with about 50 financial institutions around the globe. And all of these financial institutions that work with the Exim Bank, these are folks that basically support the import-export process. So Luis is a fabulous connection to have, and we're thrilled to have him on board as well. Cynthia Weemy. Cynthia, ICCE, CCE. She's got more than 30 years of experience in international credit collections in industries such as aviation, manufacturing, agricultural. And currently she's managing retail collections for one of the largest crop inputs company in the world. She's a senior collections professional, expertise in procedures, collections, workouts, financing. She's a collaborative leader, excellence in problem solving, resource management, best practices, alignment in industry, and even audit compliance, which is everybody's favorite topic. Octavio Jose Aronas. We are thrilled to also have Octavio join us. He's got over 35 years of experience in criminal and international law. He graduated from, I can't even pronounce this. So Octavio, I'm going to let you tell the name of the institution that you graduated from. But he also completed an extensive program at University of California. And he has been working to provide a wide range of legal advisory services to small and medium-sized businesses, multinational corporations throughout Brazil and South America. So welcome everybody. Today we are thrilled to have you, and let's go ahead and get started. Let's talk about the name of the session. When we started putting together the session, we culled all of the questions and the comments that we've received from our audience over the last many months about what do you need to hear about, what do you need to know. We've had a lot of requests for international, and when you look at the Hayako site, you'll see that we already have kind of role-based training. So, credit analyst, collector, treasury, et cetera. And international is on our roadmap now to be kind of the next category. So eventually when you log into Hayako over the next 60, 90 days, you'll see a whole category on international training. It's a big area for all of our customers. And so when we talked about what the title of the session could be, we had a lot of questions on Incoterms. And we have to tell you, as many discussions ensued over the preparation for this event, we realized that Incoterms is such a huge category that we are essentially going to be doing another session in the next 30 to 60 days, where we're going to have some folks that are even more specific to Incoterms, freight forwarders, other folks that Luis has recommended, and some others that can really give you a deep dive into what is it. But today we're going to, because it's on our title and we advertise it, we're actually going to give you an overview of what is Incoterms. What does it mean? What is the general layout? What does this mean? And that'll hopefully give you some preparation for what we're going to go basically pursue next on a specific Incoterms presentation. So just for fair and accurate reporting, I want to let you guys know that up front. Okay, so doing business internationally. I think one of the things that's come up 10 years ago, really 20 years ago, the international conversation was always different from the domestic credit conversation, right? If you were in domestic credit, if you didn't do international, you didn't care about learning international because we don't do it, doesn't matter. But if you're in international, you were in it. And as the world has, the boundaries have basically softened. And what we're seeing is that if you are not doing business internationally right now, you will be very, very likely. And you may have customers that start off in Canada or Mexico, and you probably are potentially, depending on the industry, and you're starting to buy supplies and materials from overseas just because of the cost of goods and what's going on with employment and taxes and regulations. So everybody who's out there, when you look at what you're doing now, even if you think, oh, we don't really do international, it's great that you're on the call today, because you probably will be. You'll be exposed to it. And if you can get out in front of that by at least having a brief understanding of what international differences are, you're going to be in much better shape. Okay, so here's our first question that essentially, even though you may not be doing it right now, what are the ins and outs? What is it about doing business internationally versus domestic? And on this first question, we'd like to start off with Luis and get his take on this topic.
Yeah, so Michelle, just first thing, any opinions rendered are my own as a credit professional with 25 years plus experience, as opposed to my employer. I'll let the panelists, chime in as they see fit, but international growth is integral to any business. It moves at a different rate than domestic sales, so it's good to diversify. And if there's a slowdown in your domestic market, your international sales can offset some or all of that. And so it's very important. Now, it's very different from domestic sales because you're involving other countries, and it's not just the laws of your own country, but now it's the laws of every country that you're interested in or trying to access. And the other important point is time and distance between buyer and seller. You're not just shipping domestically. Now you're shipping internationally. And if it's on the water, for instance, that could be 20 or 30 days. And so there's more involvement of third parties in that physical movement of goods. And the laws change from time to time in every country. And so you basically want to be very strategic and keep tabs on those countries that that are key for you to be in, because unless you have a presence in that country, you'll never have the same level of information as people do domestically. So it's a higher risk, but it's also a higher reward proposition.
Great point. Cynthia, what are your thoughts on this?
Well, I also need to make the same preface as Luis, and that these are my opinions based on years of experience and my training. And I'll also preface a bit here more specifically, assuming you have time to plan and are not reacting to someone having already made a sale on your behalf. My criteria start with plan, prepare, and protect. It may seem a little bit redundant in the terminology, but I believe that there is a material difference in each of these stages. As you're planning, you need to really understand your business, your owners, stakeholders, shareholders, intentions and objectives, and what their internal tolerances are. And some of those tolerances will be identified as you evolve and grow in your business activity, and as situations present themselves, and you'll come to the surface and realize, oh my goodness, we didn't anticipate that occurring, or we thought we had a plan and we overkilled it, or we underprepared, and you'll find that you've got some deficiencies that need to be addressed, or some gaps. Your own very strong and well-tested credit policy and collection strategies will serve you well as your domestic foothold, if you will, as you move into international application. And one thing that I feel is very important as an employee is applying the 5 C's of credit to my own organization, my own employer. Where are we along that spectrum of the 5 C's, so that I can help address any gaps or concerns, either from my own position and how I can best protect the company, but well as in my presentations to leadership about areas I feel need some attention or recognition. Another piece of that planning is understanding the federal and national regulations. As Luis commented, each country is very specific. Every country will have its own criteria. You will have, excuse me, requirements of GAAP, possibly if you're a US-based customer, but if you are doing business internationally, you need to pay attention to the IFRS rules, as well as any regional and local compliance. As far as the accounting pieces, taxation is a massive point. And so you'll have to be ready. Under the preparation piece, internally, what are your areas of expertise in your own organization? And are you tapping the right people to address that? Have you given them the training? Have you given them the tools, the resources, so that they can support you as best? You'll obviously have to pay attention to things like legal, logistics, accounting, tax, but then know who your outside resources are for additional support. You need to have a strong policies and procedures, again, training for your internal teams, and know what the levels of authority are. Who's the decisioning person? Who has what level of authority? And when do they need to raise that to the next level and bring in the next set of criteria, even to evaluate what the next steps are. A briefing plan is critical as well as you're moving into these things, into these relationships. What's the timing in set a cadence for yourself, for your teams? Should we talk daily? Should we talk weekly? Are there monthly records that need to be reviewed, and who's monitoring, and track your learning points as you go ahead? The protection piece of that is know your own financial capacity. Do you have any buffers? Do you have access to additional resources? And how quickly can you liquidate to get resources if you need to throw resources at remediation? Do you need to bring in counsel? Do you need to have an agent on the ground? Those kinds of things. Do you need travel? Do you need to send somebody from your team there? And do you have the capacity to make that happen? Again, also note the decision tree and the levels of authority when you're in your organization. From an internal resources, you also need to pay attention to indemnification protection, your taxes, insurance, in-country resources and agents, boots on the ground will always be your best option. You need to leverage and trust and have really solid relationships with those agents as well, which again is part of the planning piece, and anticipate that need, and then leverage those resources as well for your own internal people. Security is massive. You need security in your technology, and you need security for your personnel, depending on the country, whether you're bringing people to your location or you're sending people to a location of your customer or your vendor. You need to know what their personal safety is there, and as well as the technology, because they'll be taking their laptop, they'll be taking a mobile phone, they'll be taking their iPad, they may take some personal electronics with them as well. So that's all very important. And then coming down to the 5 C's of credit, and I'm going to take a breath here. Michelle, give me a high sign where I am on time if I'm talking too much.
Okay.
Okay. On the 5 C's of credit, their character, capacity, capital, collateral, and conditions. And in the United States, that's considered to be just very basic, very critical infrastructure to setting up your plans and your preparation. However, they translate perfectly, and in fact are even more applicable, I feel, in certain international transactions. The character piece involves also knowing your own business and your own self and your own skills, as well as your customer. And you need to know how your customer is regarded in their community, in their industry, amongst their peers and amongst their competitors. Those opinions will weigh heavily on how you can value your potential business partner, whether or not they're a good complement and a good fit. And you've got aligned values, for example, and business needs and objectives, their length of experience in the industry, years of ownership, et cetera. The restricted parties evaluations is an important piece of that. Know your customer, know your vendor supplier. Who are they? Who are the principals? Are you protecting your own organization as well as your country of origin for the goods? So look at that. Under the capacity, the obvious one is financial strength, right? Everybody looks at the formulas, the scores, that they, what's their ability, but you want to look at their ability to liquidate those assets that are on the balance sheet. How encumbered are things or not? And another key piece there is, what is their access to currency in the transaction? If your transaction is in local currency, if it's in US currency, if it's in another country's currency, if it's in, if it's in euros, you need to understand that your customer has access to that currency specifically. They may or may not, depending on the strength of their own currency and or their own business. And do they have access to the raw materials that are needed? Is that raw material in their country, or do they need to go outside or somewhere else in their country to purchase it? And again, what is their access, and do they again have the financial capacity to buy it, to get it, to build what they need to build for you in a vendor situation? But complementary to that is on the customer side. If in fact you're doing something, you need to get to your customer, and there's that dependency of picking up a piece when you get there. Capital involves their regional infrastructure. Again, are the assets on the balance sheet unencumbered? Location of those assets, and what is the value in the proper currency? Is it appropriate for what your application is? Geography is very important there. Under collateral, security is important. One thing that gets a lot of oversight, though, is the willingness to release the collateral. Is your customer ready to sell something in order to pay you, if in fact it boils down to that level of capacity and validating the asset listing in their own technology? You want to know that they can and will take care of you as their supplier. Conditions, geopolitical, gosh, that's very dynamic. It's very fluid. It's based on, a Commonwealth structure, the federal national regulations, regional laws, things like that. Be aware of the sovereignty and the government of your customer's location. Understand their banking relationships. Are your US banks your Chilean banks, your Asian bank, are they affiliated with the bank in your own home country so that you've got some relationships and you have a business partner that will help you with the security of that transaction? And again, currency becomes part of that. Be aware of natural disaster risk. Is that location prone to any kind of natural disaster, and how will that impact the conditions and access to all the other parts and pieces? You can certainly leverage if they're low on collateral, but the conditions are great. If they're low on capital or capacity, and then where is your business's willingness to compromise? I would suggest character is one area you don't compromise. Some of these other things you can use to backfill gaps as far as the tangible assets, but the character of the businesses is very, very critical in moving forward here.
I think the answers that you both just provided literally explain why this topic of international credit collection is gigantic, right? There is so much at stake here. There are so many avenues that need to be explored that trying to explain everything in a 1 hour session is just not going to happen. So it's heavy duty. So I think this warrants for sure a lot deeper dives into this topic for us, no doubt. Okay, so our next question regarding the fact of international trade includes many procedures that seem kind of strange to the domestic credit manager, but are standard practice throughout the world. What we're looking for in this question is what are some of the credit terms that may be confusing to someone who's brand new to international trade? Even the term Incoterms. I remember the first time I saw Incoterms, I thought it was a typo. I had no idea what it meant, that it was actually a word and it was actually a thing. So Octavio, do you want to kick this one off and give us your 2 cents on this topic? And you're on mute. There you go. Good.
Yes, I'm not talking about income terms, okay?
Right, don't worry.
What I would say, Michelle, is that the real world is that we still, in our experience, we still keep receiving claims from all of the world, all of my clients, based in simple invoices. So it's clear that my clients, they don't do the check, they don't know their clients. So they keep providing credits without checking their customers. So this is a problem. So we cannot do magic when we receive files from my clients, from the clients, and then we're gonna check, and their customers in Brazil or through the Latin countries, they are having severe problems concerning debits and with difficult financial situations, etc. So what I do a lot over here is what we call prevention. So we have some clients that they had defaults in the past, and now they ask us to check their customers prior to providing credits. So what we do here, we search their customers. We obtain the credit reports. It's a third-party company that do that for us over here. With a credit report, we may check those customers' legal and financial current situation. We also do a lot. We do a lot over here. We go to the court. We make search at the court. So when we go to the court and we see lots of executions, civil litigations, protests against a certain company, of course, we will tell to our client, don't provide credit to this customer because you're gonna be the next one. So going to the court, making the court search, it's a very interesting thing to do before providing credit. What we could do over here as well is one site visit. We could go to visit your customer prior to give a credit. Talk to them, talk to their attorney, see their situation, see whether they are performing well. So those are some things that an exporter should do. And of course, before providing the credit, what about drafting enforceable terms? So if you draft an enforceable term to be signed by the parties, you will certainly minimize any future problem.
Excellent. That's great. And I realized I had a little mix up here on who was going to answer what question. So sorry about that. I think we had Luis also, we wanted to have him weigh on this topic regarding some of the credit terms.
Yeah, so unlike domestic sales, again, I go back to, this involves time and distance and the movement of goods. And one thing that, in many respects, it's transactional, it's self-liquidating. I mean, credit terms could literally go from cash in advance to, 18 years if it's project related. And so it runs the full gamut, and also depending on the class of goods that you're exporting. So if you're exporting a commodity versus, capital goods, the tenors seem to try to match up as best as possible with a self-liquidating trade transaction. So in that sense, one thing that has helped me historically has been just incorporating like a trade cycle analysis into a potential sale or financing. So I literally draw a line, and it's a timeline from day zero to kind of the self-liquidation of a trade transaction, and just draw kind of what happens when on that timeline. And it also helps me understand the buyer's conversion of those goods to cash, or if they make those goods an economic asset and they produce some cash flow. So the buyer's always going to want terms because they need time to convert those goods to cash. And the seller's always going to want cash as early as possible. And somewhere in between is a final sale. And so just a thought, just do a little trade cycle analysis into your potential sale to an ongoing customer. Along the lines of what Octavio was mentioning, you also want to stop the bleeding if there's delayed payment or non-payment. So things like, stop shipping. In our insurance policies for trade, we're routinely asking exporters to stop shipping as soon as they have invoices past due 60 days or more. And that's a hard thing for an exporter to do if it's a long time buyer and these are repeat sales. But you need leverage, and you want to minimize your loss, right? And especially if this environment gets riskier and riskier. And then lastly, the sales contract is paramount, and in it you may base your credit terms on what's different about international. Sometimes it's based on the bill of lading date as opposed to the date of invoice. And so again, everyone's concerned, the buyers would prefer, to start the timeline as soon as the products are at their port. You as a seller would prefer to get paid as soon as it's out the door. And so the use of bill of lading as a basis for credit terms is unique in international. But the sales contract is paramount because in it you can determine choice of law. You can determine jurisdictions. I'm sure Octavio could mention that, just using the US as an example, if I use New York law and I basically put a jurisdiction as a, whatever US federal court nearest the seller, I could take that judgment to the buyer's country and work, with my attorney in that country to pursue collection under that obligation, right? And it goes back to, it'd be very nice to have an instrument an obligation instrument from the buyer, so a promissory note or a draft, or as opposed to pure open account like you might do domestically. So, and then lastly, Cynthia mentioned kind of the regulatory regimes and the restricted parties and sanctioned parties. Those lists continue to grow and grow and grow, and some are by your country, some are by other countries, some are by they're multinational sanctions lists. So it's just important, going back to the know your customer and character side, is you want to run the buyer's names and potentially its controlling principles by all of these various restricted parties lists. Because I mean, you'll lose whatever your margin is on that sale if you're penalized for on something that's sanctions related. And I'll just throw out one live example. In my lifetime, there's a U.S. company that they didn't do anything, but their affiliate in Singapore sold crude oil to from Iran to China, and so it wasn't anyone in the U.S., but the U.S. still went after the company and its Singapore affiliate, and they settled for a number with a lot of zeros after it, by virtue of the fact that the transaction occurred in dollars. And so the U.S. had standing because that physical trade transaction involved a U.S. Instrument, which is the U.S. dollar. So I just go back to the compliance and the regulations side of internationals. It's important. It's its own world as well, like Incoterms, but it's something the credit executive just needs to be very familiar with.
Yeah, huge difference. Great story. I think Remilio has a couple thoughts to share on this topic too. Go ahead. Oh, you're on mute. You want to unmute? Remilio.
Oh, sorry.
There we go. There we go.
So going back to what Luis was saying about the sales contract, and also Octavio mentioned that, and he might have something to say about this, because when Octavio talks about having your contract in place prior to start the sales process, it is key. Certain terms and conditions of sale, not necessarily or strictly credit terms, but terms and conditions of sale for that transaction. On international sales, that is key. And it's in one way, I always tell clients, that those terms of sale in one way need to create the right incentives for customers to pay. Sometimes, because the legal process, as I'll probably discuss in some of the other questions, the legal process is slow in many of these countries, in Latin America specifically, and in Mexico. So because that case is going to take so long, you need to make it onerous on a debtor that intends to take as long as he might want or can. So late interest, attorney's fees, even damages, you can liquidate damages. You can include clauses for that, clauses that are going to make it harder on a debtor, to default. Those are the ones that I tend to like, to create the right incentives on debtors, customers. The other clauses that you need to pay special attention to are jurisdiction and venue clauses. Luis was talking about probably having a jurisdiction, or sometimes there are contracts, and I see those all the time, credit applications that have terms of sale that have jurisdiction clauses that point to the courts of New York, and the governing law clauses, under the laws of New York. But just keep in mind that it is to enforce foreign judgments, particularly in Mexico, it's extremely difficult. There is no treaty between the countries, between the U.S. and Mexico, to facilitate the enforcement of foreign judgments. So it's hard and it's expensive. Usually we only recommend those kinds of actions on higher amount cases that justify the legal expense of going through that. But still, it's going to be hard. In some ways, sometimes I tend to lean more towards arbitration clauses. That's my personal choice, because arbitration is there is an international convention, the New York Convention, and most of the countries around the world are parties to that, and most of the countries will have adopted model laws on arbitration. And that is the case of Mexico and most of the Latin American countries as well, where you have a procedure law that provides specifically for the enforcement of arbitral awards. And at least in that way, it's a little bit more predictable, you know, what the process is going to be like. And actually the creditors outside of Mexico, they'll know beforehand what are the strict rules that they have to follow to get that arbitral award enforced. With judgments from a judicial court, it's a little bit more difficult, more complex, and the debtors have a lot more defenses to that. I think Octavio had something he wanted to say. Octavio?
Yes, Romero, just would like to mention that you and Luis were telling us about the contracts. In my real world here, at least regarding to my clients, most of the claims that we receive here are based in invoice. There is no contract, so this makes it much harder to collect, to obtain the funds back. So the real world, especially from, I don't know why, clients from the United States, they make the sales based in invoice. They don't invest in contracts. So it's a hard situation.
Wow, a lot of complexities in here for sure. No question about it. So we're going to go to the next question here regarding the recession, what's happening, what happens when people run into a bankruptcy situation. And I'm just going to suggest, in the interest of time, because we're running a little bit late already, is we've actually got Octavio listed to respond to this question. And maybe let's go with Octavio. And then if we've got more time at the end of the session, we all can circle back and put your 2 cents on this, if that's all right.
Michelle, to talk about bankruptcy, you mean, correct?
Bankruptcy, yes.
Bankruptcy. Yeah, of course, we should avoid bankruptcy and Chapter 11 as well. The Brazilian Chapter 11, it's terrible. I mean, we have to take care. I have already talked a little bit about prevention. So even if we check a company, a customer, a Brazilian customers, for instance, today, we have to do it in 6 months once again, because a company that has been performing well today can be in danger in 6 months. So we have to pay attention into this. And besides of this, bankruptcy is terrible. If a company goes into a bankruptcy in Brazil, you won't see any asset. And even the Chapter 11, it's not easy. So most of the Brazilian Chapter 11, they ask for 80 to 90% discount, and the payment to be done in 2 years. So you will receive very little, as a matter of fact. So what I would like to enforce over here is that we have to do prevention prior to provide any credit.
And I think we could probably make a session that's about 4 or 5 hours long just on that topic alone, right? It's so complicated and so many things that need to be reviewed and incorporated. It's a big issue. So no doubt we've got more content and more sessions coming up, I think, to answer those appropriately. So thank you. Okay, so our next question here is about essentially mistakes that are made when dealing with international distributors, basically treating these distributors the same way that you would a domestic one. And so how are things different when you're dealing with international customers, distributors? Kind of touch on this. And we had, we've got Cynthia on tap to kind of address this comment, which we've kind of touched on a little bit earlier in the process, but maybe you can throw a little bit more context around that.
Certainly, when I first saw this question, that you may recall my reaction was, what isn't different?
That's right.
As being the challenge here, everything from the legal process, the payment terms and conditions, delivery, logistics, the timing of delivery, And I would agree with Octavio. It's even internally in US based businesses very difficult to encourage, if you will, our legal people to put a contract in place. They want to use a standard purchase order or just a point of sale transaction with an invoice, and understanding that piece of it. The engagement of the executive leadership team, I think, is something that's very important when we're working with our international customers and colleagues, to know that you have the support as you know, the representative of the company, but also for your client and your customer to know that there is a commitment from management, particularly, for example, if it's the first time sale with that customer or in that country. They want to know that we as an organization, you as individuals, me as an individual are really in it for the long haul. They're not as interested typically in a single transaction. You know, thank you. You know, I bought that one time from you. Next time I'll go purchase it from somewhere else, or I may not need it ever again. Whereas a lot of times in the US, people will work their network and will look for vendors that have a different price or value add to their business and their products. Hierarchy, social standing, religious differences of social structures and cultural impacts are very, very important. You know, the obvious thing, of course, is languages and terminology. Once you step outside the US, most people who speak English as a second language have learned a very formal English, British English, if you will. Be a bit, I hope not offensive to anyone in saying that, but our cadence, our just even the difference in pronunciation and the dialects of English, it's very much the same. The difference of dialects in Spanish and the structure of the languages, the dialects, Portuguese from Brazil to Portugal, very different than you know, to each other. So there's the formality, and you have structures around, for example, people taking offense if they feel you're speaking a lower level dialect to them, even if you're speaking well in their language. That is something that's very, very important. The terms, let's see, the payment, the currency, those kinds of things need to be paid attention to, and political cadence. Pay attention to when the elections are coming in the country that you're selling into. There are obligations, for example, that stop when there's a change in leadership. In the president or the ruler of the country, or the sovereignty changes. Years ago, we had situations where we sold to the president of a country, and that president was consuming our product for personal and professional use. And when that person went out of power, we were left standing with an obligation, because the new incoming president of that country did not take on the debt. The government didn't absorb the debt from the previous leaderships. So those are the kinds of things that just off the top of my head come to the surface quickly on this topic.
I think that's great. And Romelia, I know we kind of shortchanged you on question number one. So I think you've got a couple of thoughts on this as from your perspective.
Well, yeah, in addressing this question, the first thing I need to tell you, I'm going to let you in on a little secret. Our legal systems in Mexico and Latin America are profoundly different than the legal system in the US. It just, the difference comes from our history. You know, our legal traditions are totally different, civil Roman law versus common law. And that creates a profound difference in our, not just our legal system, but our court systems as well. How judges decide cases, what's their reasoning, how they apply the law. All those things are going to create a profound cultural difference that you're probably not expecting. And I'm talking about people usually in the US and Canada based on these common law systems. So I'm going to give you an example. And that profound difference translates into the laws, the legal remedies, and everything that all those tools, legal tools that you're going to need on these transactions to support them and to protect them, everything. One example on one of these cases that we got for collection from a client, the balance was from licensing, software licensing. So when we got the contract, they actually had they established as their main remedy an injunction. It provided that if they didn't, the customer didn't comply, that they would have an injunction remedy.
Wow.
Which was unique, said, oh, that's a good remedy. But the only problem was that we don't have injunctions in Mexico. And they had a jurisdiction clause that said that if there were any problems, controversies, that those were going to be solved by the Mexican courts and based on Mexican law. So I said, where in the hell in Mexican law am I going to find an injunction? There's no injunction. So
Right.
it happens a lot. There are remedies that sometimes do not translate because they're non-existent. We do have some kind of injunctions, but they serve different purposes. It's not the same as the injunctions in the U.S. So that's an example of how different the legal system is. How are things different when you're selling international? You need to know a little bit, probably, or have the advice of someone that can tell you, if it translates well. Another big difference also that you have to take into consideration is that, and here comes my secret number 2. The courts in Mexico and in Latin America are not the most efficient in the world. They're just not. We have our problems. Courts are. We have a federal court system, a state court system, and it varies throughout the country how efficient and effective they are and reliable at the end of the day. So maybe that's why I go back to what Octavio is saying, that in the U.S., when we get claims for collection, we're just very used to seeing just purchase orders, delivery receipts, bills of lading, invoices, and that's what they use to collect because that's what they use on their everyday. And probably I like to think that it's because probably in the U.S., those courts are a little bit more efficient, more effective. That will be enough to bring a strong case and not to take years, to get that claim collected, or executed against assets of the debtor. In Mexico and the Latin American countries, I think Octavio suffers the same issues that I have through the courts, those documents are really not going to help you get that claim enforced swiftly. So that's why we emphasize that we have to do a better job. And this ties into the first question, the ins and outs of doing business internationally. We have to do there. I think there are 3 areas where we need to do a better job. And one, of course, is credit management. Within credit management, due diligence, look up your customers better. Right now, there's no excuse to doing those searches online because in Brazil and in Mexico, we have a lot of resources open to the public where we can search companies, corporate information. We can find out about liens on companies. We can find out a lot lawsuits where if they are involved in lawsuits throughout the country. So there's tons of information. Second, we need to do a much better job at securing transactions. And that is a key, I think, in the Latin American countries. We need to know at least the basics, what documents are going to help us pursue that claim efficiently and effectively. Because in Mexico and also in Brazil, the Latin American countries, we have different kinds of proceedings to enforce a debt claim. So you want to position yourself in those kinds of proceedings, like executory or executive proceedings. And to do that, you need certain security documents, like the basic one is the promissory note. In Mexico is the pagare, Colombia, also the pagare in Brazil. What's going to be the confesión de dívida, Octavio? Something like that.
Confesión de dívida.
Yeah, so you have the equivalent in all the Latin American countries, and that's like your basic document that you need to have. And then you add layers of protection as much as possible, like a security interest. In Mexico, it is a pledge, probably a personal guarantee, and those are things that could be easily included in clauses in your contract. We're not here doing overwhelming the customer. These are very little things that you can do easily, inexpensively. And the last thing that they have to pay attention, of course, is the part of debt collection. You need to have keep a closer eye on your customers, and through a local source, make sure that they're seeing your customer, making sure that the company's still there doing business under the same company name, and that it has still a good, reliable business, that it's not going to disappear from one day to another, because then that your courts are not going to be the fastest ones. So hopefully this clarifies a little bit on this question and the first one as well.
Yes, thank you so much. And I think actually it's a perfect segue into kind of the next question that we have here, that we also have an audience question. So maybe we can incorporate this, the answer to this too, is, you touched on a good point. It's never been easier to access information online, not just in the US, but around the globe. But one of the questions we want to talk about here is, what are some specific resources? What websites? What are the kind of, if you were getting international, what are the first places that you would go to search? And maybe what are some of the other tools that are out there that are just, especially for just getting started? Luis, you had a couple thoughts on that, I'm sure.
Yeah, I mean, they shift over time, and they're only as good as how active that particular provider is in a particular country. So just throughout history, the International Chamber of Commerce, ICC, has a very robust site. It includes Incoterms, by the way. There's some publications and training, but you got to realize it was built after World War II. It's just about every country, and so that's kind of where kind of general consensus and agreements on international trade is documented. So I mean, I don't know if we're going to follow up with some of these links or post them, but just International Chamber of Commerce, ICC. Working with one or more just very international banks has always been helpful as a credit professional, and generally these are money center banks in every country. Some are much more focused on trade than others, and some are just much more international. But with a bias towards the U.S., I mean, it'd be the likes of like a Citibank, with a bias towards Western Europe and Asia, HSBC, because both have branches and banks, subsidiary banks in just about every country, right? 150 plus, and in the emerging markets for sure. So I would just get to know kind of the trade staff, whether in operations or credit, or just trade banking at one or more banks in your country. And each of those banks publishes some resources on their websites. One that I really like is HSBC puts basically business guides where you could pull up an entire book on a country that you're going to be actively selling into, and they update those from time to time. They talk about the payment systems, and it's just a very good country profile. Along those lines, some of the publications, The Economist, Intelligence Unit, you have to pay for it, but you can certainly buy country profiles through The Economist Intelligence Unit, and they update those from time to time. And it's just a very good, to have that for at least the countries that you're primarily going to sell into. And then lastly, every country has an export credit agency like EXIM, and related kind of international focused agencies. So in the US, we have the Department of Commerce. And if you think about it, every single US embassy around the world has a commercial attaché and staff from the Department of Commerce, foreign service officers. And those people rotate around the world and bring a wealth of knowledge with them. In the US, they have 100 offices. So I would work with your nearest, equivalent Department of Commerce office for your own country or any country that you're actively engaged with. And they have websites, which in the US it's trade.gov, G-O-V. And there's some good training in there, and country reports as well. And curiously, they also have the ability to pull or build a credit report on a counterparty. And I always found that interesting, is that in addition to the buying a report off the shelf from a bureau, you could conceivably have your own embassy do a site visit and check out a counterparty overseas. Likewise, they could introduce you to providers in that country. Sometimes people are looking for a joint venture partner or an accountant or an attorney, and so I just go back to the commercial side of your embassy in the countries that you're active with could be very helpful.
I think it's great information. One of the questions we had was about, what other sources for credit reports are out there. And I think a lot of people don't realize, right? I mean, a lot of the bureaus now will say, Experian, Equifax, D&B, CreditSafe is out there, Bureau Van Dyke. There's a lot of credit bureaus that you can actually get an off the shelf. As you said, there's a report and a repository that's being updated by trade data, public records. But most of these services have the ability to go do a fresh investigation, right? To say, that's great, I got their credit report, but I want someone to do a site visit. I want someone to go out and actually check the public records that may have not been entered into a database yet, but are sitting in a stack. Right. So I think, that's maybe something that we'll do as a follow-up to this is I'm going to ask each of you on the panel if you want to provide us with maybe your top 3 favorite websites that can get someone started in the international world. And if you even have some additional resources for that type of reporting, right? Fresh and investigative reporting, site visits, et cetera. And I think we can compile that and either send it as an email follow-up or post it when we post the session online. I think that's great information to have. So which leads us to our last question here. And for those of you who are with us, which is pretty much everybody, is hang with us a few minutes more. I think Romelio has to drop off pretty shortly, but we've got one last question that's going to be the question about Incoterms. And we're going to get through this question on Incoterms. We'll do a quick overview. Luis is going to give a quick overview, and then please hang with us. And we've got a few more questions that have come up, and these folks are happy to answer your questions. So hang tight, and this is the next question. Incoterms, take it away.
Okay. Yeah. So we're currently, there's Incoterms 2020, and that's the most current revision. The last big revision was approximately 10 years prior. There's no, it doesn't have to be every 10 years. They'll update Incoterms as needed, but roughly in modern history, it's worked out to about once every 10 years. And these are kind of official commercial terms published by the International Chamber of Commerce. They're voluntary, they're authoritative, they're globally accepted. And it's basically a text for determining the responsibilities of the buyer and seller and the delivery of goods under sales contracts for international trade. There's about 11 Incoterms. They range from Ex Works, which is basically, the seller's responsibility stops at the door of their plant. And then they move into there's C, F, and D terms, the first letter of the terms. So examples of that are CIF, CIP. Examples of the D terms are DDP, delivered duty paid. And so they basically go from the seller's door at the plant all the way up to as close to the buyer's location. And there's the points that are addressed are very logistical, and they have to do with who's responsible for export packing, who's responsible for marking and labeling, who's responsible for export licensing and clearance, Who's going to pay the forwarder's documentation fees? Who's responsible for inland freight to the main carrier? Who's responsible for vessel loading charges? Who's going to nominate the export forwarder? Who's going to pay marine insurance? Who's responsible for unload charges from the main carrier? Destination terminal charges? Who's going to nominate the on carrier in the buyer's country? Who's going to cover security information requirements? Who's going to pay customs brokerage fees? Who's going to pay duties, fees, and taxes? Customs taxes. Who's going to deliver to the buyer's destination in their country, and who's going to unload into the buyer's location? And so those are important points. They're very logistical. And the key point around Incoterms, I go back, is nowhere in Incoterms does it specify when title passes. That is only in your sales contract. And so you as a credit professional just need to be very specific. We go back to recommending some base level of a sales contract and addressing when title passes. Because again, the buyer would love for title to pass as close to them in their country. The seller would love for title to pass at their front doorstep,
Right.
and somewhere in between is an actual sale. So I hope that helps. And again, the ICC website could be a useful tool. They've got some. You could literally print out the Incoterms or a chart, or take a short primer on the topic.
Yeah, I think that's great. Anyone else want to add to what Luis has suggested? Everybody's favorite topic. Okay, so we got a couple questions that came in. Someone from the audience said, "How safe is the CAD, cash against documents, through bank? How safe is that for export orders?"
Yeah, I could talk to that. So the payment terms, the basic payment terms for international trade are cash in advance. Then you move to letter of credit, confirmed. Then you have unconfirmed letter of credit. Then you have documentary collections through a bank. Some people use clean collections with a draft directly from the buyer. And then you have a credit insured open account, and then you have cleans or straight on open account. And again, this is based on the level of trust between the parties, which instrument you're going to use. But in these times, you need to give that pretty good thought as to what instrument you're going to use. In the case of a documentary collection through the banks, they're governed by international rules. So you're still subject to the buyer's country, because they could conceivably defend against payment, but they're hard pressed because there's uniform rules between the banks. And the problem is that, you're sending title documents to the goods, and ostensibly the goods are already shipped to the buyer, so you could be stuck with having to find new buyers or liquidate your goods in that country or near that country. And so it goes back to the level of trust, and if there's some concern there, you can just move back towards commercial letters of credit, confirmed or unconfirmed, because that's a shift in the obligation to pay from the buyer to the buyer's bank.
Excellent points. So it looks like Romelio had to log off and go to another event, but he actually posted a few links in our chat box. So those of you that are still on the call, take a look at the chat link. And as mentioned, we will be following up with some additional resources for you. And our folks are happy to do that. And I think we're already running a little bit over time. And I think this is pretty much going to wrap it up for us for the session. I think if anything, this has proved we have a lot more material to cover, and each of those questions could be a session in and of itself. So folks keep an eye on information coming out from Hayako as we move into the next weeks and months and into next year, and we kind of formalize a program for international. Any other questions from the audience? Go ahead and put them in the chat bar. Looks like we got some good feedback. And I just want to also thank everyone that was on the call today. We really appreciate it. And as we mentioned, we've got this program. This is a mini certification program. And because you were on the session today, we're offering this program at $199 but you're on the session today. We've got a discount code for you, LAWS50, and that'll give you 50% off of this particular mini certification program, which is a whole compilation of sessions and resources that we think you'll really enjoy. And be sure to join us this afternoon. In fact, at 3 o'clock Central today is our next and final session of today. And we're going to have Kelly Schmidt from Zillow, and we're going to have Andrea Wolf, and I think even Bob Schultz is going to join us for this one. So thank you again to our panelists. We really appreciate you joining us, and especially as kind of our inaugural international session on Hayako. We're really excited, and we are thrilled to be conducting more of these sessions as we go forward. So thank you again to everybody.
Thank you.
Have a great day.
You too.
My pleasure. Thank you for the invitation. Bye now.
Thank you.
Thank you.